Hey, what's up, millionaires? Mitch Durfee here. Today I am in West Palm Beach. I'm actually flying up to Atlanta, Georgia to look at multifamily properties. And honestly, this was a totally last minute trip, but I wanted to keep you guys updated on these journeys because this is pretty much what's been going on. And this year, I'm definitely going to be doing a lot more of these because I plan on grabbing more multifamily properties this year. So, really just wanted to again update you on what's been going on, and then of course give you some tips and some strategies to help you guys out with your investment goals this year. So number one, first things first, updated, just got back to West Palm Beach, flew in Monday, got in around midnight, and then the last 2 days we were at the flip property here in West Palm. We were able to install all the kitchen cabinets and get the countertops measured. That project did stall a little bit while I was gone, but it's back on track again today. So I think this weekend we're going to be working on getting the roof done, and the countertop should be here Tuesday. So next week this thing should be wrapping up pretty nicely. But this video, I'm really excited because this is, like I said, it's Thursday. It's 5 a.m. right now. So one thing I want to share with you, this waking up early thing, it's really awesome because like the idea of being at the airport at 5 a.m., knowing that I'm going to Atlanta to be hanging out with other multifamily investors. Like what's cool is like the group of people that are going, every one of these people, it's Thursday, it's the middle of the week. I think Tuesday around 6 o'clock at night is when we were like, hey, we should go to Atlanta to look at these properties. So it was a totally last minute gig. Now, I also want to share one thing with you because the idea of going up to Atlanta may be kind of overwhelming to some people that are getting started investing in real estate. Like I said, I'm down here in West Palm Beach and I've been investing all over the country, but flying up to Atlanta is kind of a big deal, right? So this trip is not a cheap trip. It's not like it's a non-expensive trip. This trip is going to cost probably $500 to $700 to do. But one thing I want to share with you is that most investors and most people that are wealthy actually don't think about the expense. They actually think about the return on that investment. Now, going up here to Atlanta, if we are able to find one property and secure that property, that could equal a couple $100,000 or even $50,000. So just by showing up to this property and putting in the work for a day here, the returns on that time and the returns on that investment is big. Again, wealthy people don't focus on the expense; they focus on the return on that investment of time and money. So I wanted to share that with you. And then the other thing I want to share with you is that we're producing more YouTube content now. So if you're watching this video and you're liking this video, make sure you like, comment, and subscribe. I definitely will appreciate that. That's something that really helps out this channel. But again, like these videos are really here to help you with your investment journeys, whether it's into e-commerce, into real estate, or fixing your credit, or anything like that. Like we are here to help you grow. So I want to share as many tips and strategies with you as I possibly can. So make sure that you're liking, commenting, and subscribing. But the reason we're creating more YouTube content is because these videos, when we create these videos, they tend to last much longer on YouTube, right? So if we posted this video onto Facebook, you would probably see this video for like maybe 1 day, maybe 2 days, and you get more views. And I think that what's interesting about using Facebook and Instagram is you do get this dopamine rush of engagement that you get for 1 or 2 days, but the long-term value of that content that you're producing on those platforms, it just disappears, right? People are not going back through your videos from 2-3 years ago and seeing this. But if you produce content on YouTube, you can actually start to build these assets over time. And over time, when people are searching for these videos, they're going to continue to find these videos. So you may not get that 500 to 1,000 views right off the bat, but over time people will continue to see these videos. So it's definitely more of a slow burn, but that's why we're really focused on creating more YouTube content. So with that said, again, we're going to dive in here. I'm going to show you a few things on this multifamily stuff, and then I'm just going to give you a quick, let's go 3 tips on large multifamily investing. So I'm going to give you 3 tips here. One, the nice thing about multifamily investing is it's not an individual sport. This is definitely a team game. So we're flying up to Atlanta, and there are There's going to be a total of 5 of us looking at these properties. Again, this is not an individual thing, so you actually get to rely on the resources and expertise of other people. 2, the nice thing about large multifamily real estate is that you don't actually have to have all the money as long as you're an expert at deals, whether it's finding the deals or managing the deals. A lot of times you can raise money from other investors. So in fact, this is one reason that we're actually producing these videos, is to show other investors, hey, look, this is what we're doing. We're doing due diligence on these properties. We're walking these properties. We're looking for great deals for our investors. So again, by creating these videos, there are investors that are seeing these videos, and they are seeing, how we're actually able to manage these properties and some ideas and things like that to make sure that these are an asset class that they're interested in investing in. So again, so you don't have to have the money. If you can find the deals and manage the deals, then investors will invest with you, and you can take down these deals. And the third thing that I love about multifamily investing, it's the asset class alone. Like a lot of times when you purchase these properties, you're able to force the rents up, right? So value add is a huge thing on multifamily properties. So we won't buy a property unless we can force the value of this property up. Now, what's cool is if we do force the value of this property up, so once we force the value of this property up, we're actually able to either refinance the property and take the cash out, or we can sell the property, and again, those returns on multifamily properties are much bigger. So those are 3 reasons why we're looking at multifamily properties. Again, I want to also share one more thing with you. So we have about 5 minutes before we're starting to board this flight. But what's super cool about this flight is because it's an out and back flight. So we're leaving today, like at it's 6 o'clock. We're going to be taking off, or 5:20. We're going to be taking off to go to we're going to be boarding the plane at 5:20 for a flight that leaves at 6. And we're going to be getting there at 8 a.m. and then flying back the same day. So today we're definitely packing like pilots, traveling super light. So all I'm carrying with me today is my AirPods, my iPhone, my car keys, some sunglasses, and a jacket because it's 35 degrees up there. And again, if I come up with any more tips or strategies or anything like that, I'll also include those in this video. Hey, what's up, millionaires? Mitch Durfee down here in Atlanta today, looking at 331 units. This is just one of the properties that we're touring today. Huge shout out to Oliver for putting this thing together. Oliver is one of my great friends. He's actually from the north, like I am. And he's just an absolute animal when it comes to real estate and business. And we met at a 10X GrowthCon event. And we have just been, honestly, we've been looking at some of these properties, and we've partnered in the past on some multifamily properties. And today we're just walking through, and we're basically just checking out some units and some opportunities for more properties for us to invest in. We're gonna walk inside here and look at a recently renovated unit. And yeah, so we're just gonna see if we can basically find a good opportunity for us to make another investment. Go.
So what'd you think about today?
You gotta think bigger.
What does bigger mean to you?
Went and saw a 300 unit deal and thought that was big, and then before you know, we're looking at 700.
Right.
Just like that.
Yeah.
Appreciate
What
it.
was the biggest deal you looked at before?
Low twos. Yeah, low twos. Yeah, which it's all relative, right?
Right.
Yeah. And the guy selling the 700 unit deal is probably taking down something even bigger.
Right.
Yeah.
It's like $82 million worth of property right
Wow,
there.
right?
One property is $82 million.
Just one.
Like,
Could be worth more too after we do something to it.
yeah, we gotta do something to it. What was your biggest takeaway, Doug?
I think my biggest takeaway was, again, just thinking bigger, looking at more doors and just making it happen, just realizing that it's more than possible, right? So it's more than possible. So I think once you just train and redirect your mindset, letting you know that, hey, you can do more than 10 units, 20 units, 30 units. It takes a team, but it's out here for the taking. Yeah. To this date, just 6 units.
6 units?
Yeah, 6 units. Yeah, 6.
6 units. We went from 6 to 700 in one day. Like,
Yeah.
And the next thing is like, after continue to see him, continue to get comfortable with the situation, now it's like, that's the one. Now we have context. We saw, how many properties you saw today? 5 properties. Some were 2005 built, some were 1973 built, some were 2000, 2009 built, right? So we got the whole spectrum, A's, B's, and C's, right? And once you see those properties, now you start to get a feel for what you want to invest in and what you don't want to invest in. There were some properties that had burn units that were crazy. People weren't, yeah, the occupancy was 50%, but the economic occupancy, which means people that are actually paying you, was only 10%. Like, imagine buying a property that had only 10% economic occupancy. You might as well just do a development deal and do a whole entirely new building, right? So that 10% occupancy, yeah, it's a little bit of money, but you're going to be carrying that property for at least a year until you get it to where it's occupied enough that it can actually pay for the mortgage, pay you dividends to actually take out and continue to grow your real estate portfolio. Mike, what was your biggest takeaway from today?
Volume, seeing the volume of properties, and also seeing how certain properties are run, like from the property management. When some of you were like, this could use a little bit more work, and you've seen ones that, like the last one we saw, which was pretty good with security, property management on point, trash collection was on point, and all that. So the volume of seeing things, not just saying, this is it, I'm not going to invest it.
So I hope you guys enjoy this, and if you're interested in investing in multifamily properties and you have any more questions, definitely reach out. But again, just keep in mind that this, you have to get up early. You got to be at the deals. Don't worry about the cost. Think more about the return on investment, and partner up. Again, join good quality people. So thanks for watching, and I'll see you guys in the next video. Peace.